Hello dear traders, today is the 3rd of June, Tuesday. Here's the red hot market review prepared for InstaForex. As for the news flow today, all eyes are on the inflation data from the Eurozone. Later, the United States will publish its job openings report. That's all for today's key releases. However, this trading week promises to be quite eventful. On Wednesday, the US will release the ADP non-farm employment change figures, while Canada will announce its key interest rate decision. On Thursday, the European Central Bank will also reveal the interest rate decision. And on Friday, the highly anticipated US non-farm payrolls report will be issued. Now, let's move on to the trading charts. We begin with gold, which has updated the highs of the previous weeks. The bullish scenario has played out. Currently, there are no new trading ideas for this instrument. Gold is breaking out of a triangle pattern to the upside. A short-term downward correction is possible before a continuation of the upward move. On the chart, there are two swing lows that could serve as potential entry points for long positions. However, this remains speculative. Yesterday, the euro-dollar pair rose, reaching the long position target at 1.1427. This level was slightly breached, followed by a downward correction. At the moment, there are no clear new upward targets. The pair is likely to trade sideways in the coming days in anticipation of key macroeconomic releases. Meanwhile, the pound-dollar pair has tested the swing high area multiple times and has begun to decline. There are several swing lows below the current price. Buyers might wait for a deeper pullback before considering long positions. The Australian dollar appears to be setting up for a decline after a slightly rise. The potential drop could be substantial, about 1,000 pips, and may happen following the release of the non-farm payrolls and if the US dollar strengthens. The USD-CAD pair is currently attempting to test the swing low as part of a broader downward move. However, since this swing low is quite old, it's not a reliable reference. The trend is clearly bearish, but there are no attractive entry points at the moment. The main idea for the dollar-yen pair remains bearish. The target is set at 139.55. We see a steady downward and two yearly lows. At present, however, there are no ideal levels to initiate new sell positions. That's all I wanted to tell you today. Thanks for watching. See you again soon.